Welcome back to Grown Quality. My name is Elian, and in today's video, we will go over what has happened in the markets this week. Because it's Friday, and that means that another week has gone by, so we'll check in on the news, starting with my portfolio. And after we've checked my portfolio, or at least the highlights from this week from my portfolio, we will go over my watch list to see if there are any developments there. And then we also had some news regarding the Fed and inflation numbers this week. So we will take a look at that and you will get my opinions about it. And then in the end, I also got some news regarding the newsletter I'm trying to release. So if you want an update on that, stay tuned for it because I will also give a nice bonus with it. Now, let's just dive straight into it. So the first thing that has happened within my portfolio is that Monday has taken a big drop. Now, how big? Well, on Wednesday, when CPI numbers were released, Monday also got downgraded, which means that it was down about 7%. And as we can see, on Tuesday, it didn't really recover either. So what happened was that Citigroup downgraded Monday from a buy rating to a neutral rating and cut the price target to $250 from $277. Why did Monday react as extreme to it as it did? It was basically the first downgrade we have seen, so that is always quite notable. But is it justified? Well, in my opinion, not completely, although I think I can see what they are coming from. I haven't seen any comments regarding the downgrade, so I don't know the exact reasons. But it came on the day that the CPI numbers came in hot. Now, that does have some consequences for small caps, and I'm not saying Monday is a small cap because they have a $10 billion market cap, but they do have a somewhat smaller market cap. I will go into the consequences for the CPI print later in the video, so you might want to stay tuned for that. But what happened was that it really hit Monday, and the combination of the two, well, that wasn't all too great. What other consequences does this have for the stock? Well, Monday might want to trade down towards this level, and that's about $190. Do I think it can get there? Well, after this drop, yes, of course. Do I see it as an issue that they have been downgraded? No, because I did my own research into it. I made my own analysis, and you can also find that on my channel. So you can decide for yourself whether you are neutral on Monday or you are more bullish on Monday compared to other stocks in the market. Now, besides Monday, we also had Rivian taking some hits. And as we can see here, Rivian, well, they got down quite bad yesterday. So what happened there? Well, Ford came out saying that they are gonna restart production of the Ford F-150 pickup truck, or more specifically, the F-150 Lightning. And this is a competitor to the Rivian R1T. Now, do I think it will impact Rivian? Not really. Now, the Ford F-150 Lightning is supposed to undercut the Rivian R1T in terms of pricing, because with the announcement of the restart of production, Ford also announced that they will be dropping the Ford F-150 Lightning prices by $7,500. Now, as a result, this has of course been seen as a competitive threat to Rivian. And do I think it's justified? Well, partly, because they are somewhat competing for the same customer. However, I do think Rivian will be fine with this. And if Rivian will sell a bit fewer R1Ts, that might actually be good. We know that Rivian makes more money, or better said, they lose less money on the R1S models in comparison to the R1Ts. So if they sell a little fewer of the trucks and a little more of the SUVs, what will happen is that's only good for their gross margins. So it may be a bit of a competitive threat, but if it's actually a bad one, I'm not sure. Now, this may be a bit of a weird statement saying that it might be good for the company if they sell a little fewer of the trucks, but it's really how I see it. Now that we have spoken about the stocks that are in my portfolio, let's just take a look at what's on my watch list because I think Lululemon is starting to become somewhat interesting here. Now, what happened with Lululemon? Because this doesn't really seem natural. Well, Lululemon reported earnings, and those earnings weren't that great. Now, what has happened as a result of having those bad earnings is that analysts started cutting their ratings and they kept lowering price targets. So, as a result, Lululemon stock has now dropped over 20%, going from $480 here when they released their earnings numbers to now being at $350. And well, that has made me quite interested in the stock. Now, I will still have to do some research into Lululemon because I don't know if it's gonna stay with just one bad earnings report. And this is, of course, what we are gonna try to find out when we do research on the stock and specifically the latest earnings release. But it is on my watch list and it is starting to get really interesting to me. Now, we also have Robinhood, and Robinhood has had a recent big run up. Now, did I miss it? Yes. Do I think it will not come back? No, I think it will. And some analysts seem to agree with me. And that's where Citigroup comes in because they released a press release because they downgraded the stock to sell and they highlighted some of their points. So let's take a look at the press release regarding it. So, what it says is that Robinhood slips as Citigroup downgrades to sell on disconnect from fundamentals. Now, Robinhood Markets Inc. was down 2.7% at $17.8 in pre markets after Citigroup downgraded online brokerage to sell from neutral, saying valuation is disconnected from fundamental outlook. Now, that purely depends on the time horizon you look at, in my opinion. If you look at it at a bit of a shorter time frame, then I think the run up has been justified. They have been getting a lot new customers, a lot of money is coming in or has come in, and the company seems to be doing great. So I think the run up on a short term perspective is justified. But let's continue. Citigroup says that while fundamentals have improved recently, pointing to healthy trading activities, AUC, assets under custody, and deposit growth, it sees risk on any moderation or pullback in broader markets and slower retail activity. Now let's continue because here this is the part where I do agree with them. Brokerage adds giving recent relationship between Hood and Bitcoin prices, slower crypto ETF flows, and the BTC halving event on April 20th represent a risk to Hood's stock price. So there are some points in there that I agree with, but let's just finish the article. Because Citigroup raises estimates and boosts the price target by $3 to $16 to reflect updated NII and gold sweep balances, revised transaction revenue expectations, adjusted expense outlook, and updated tax rate. So, what I find funny about this is that they give it a sell rating with a price target of $16, an entire 10% down from where it's now, but they do see a risk for any moderate pullback in their assets under custody. So, what they are saying is we think that retail traders will pull their money out of the markets in mass if the markets drop a bit, but yet they still give it a price target that's only 10% lower than where it is right now, and they give it a sell rating. Now, that makes no sense to me, but that's something completely different. What I do agree with here is that I think that Robinhood has been racing up due to a lot of greed in the market from retail investors. We can see that in the Bitcoin prices, they have raised up massively this year. And in my opinion, that is what has been fueling this stock. Now, I don't think Bitcoin will raise up forever. As historically seen, it's really a boom and bust asset class. However, I do think that it makes Robinhood an attractive investment just for the right prices. And in my opinion, that's not really here. But I do want to highlight this because there are some analysts saying the exact same thing. So that was it for my news regarding my stocks and the stocks on my watch list. Now let's take a look at the macro news because we had CPI numbers coming out this week. Okay, so here we have them, and I stole this graph quite handy from the New York Times. But what we can see here is that on an annual rate, inflation came in at 3.5%, or at a year over year number, I should say. In my opinion, that's not all too bad because analysts were expecting a 3.4 number. So that's quite okay. We did also miss the month over month figure because that was at zero point 0.4 where zero point 0.3 was expected. And that's not great, especially not when you think about the Fed that wants to cut rates, but now sees that the inflation upticks from January and February are a bit stickier than they thought they would be. Now, does this make me convinced that a 3% drop in the Russell 2000 was justified? No, no, not at all. Because this is just a 0.1% miss on the year over year number, and it's not that bad. Now, it does seem to level out the inflation number, but do I think it's a problem? Not really. But I also do not think that that's the reason why stocks dropped the way they did. Because if we look at this chart, this is the month over month, the supercore. Now, supercore has taken a bunch of things out of it, and what we can see is that the supercore on a year over year number is really ticking back up. Now, remember, during halfway 2021, where the Fed started to increase interest rates, and that was about these levels. So, what we see is that we are going back there, and that's what scared investors. Now, do I see this as a problem then? Yes, yes, I do. And this has also made me think about my next moves regarding my investments. Because if inflation expectations start going back up, what will happen is that investors will sell stocks off. This is just the way it goes. Now, do I want to be adding to my stocks on the top of the cycle? That's not ideal. Do I want to time the markets? No, that's a completely different thing. That's not what I'm trying to do here. But it does make me question how to think about my weekly DCA. Okay, so as we have seen, the CPI numbers this week were not great, but we also had PPI numbers, the producer price index. And these were a bit better, and this also gave investors some newfound hope for rate cuts this year. So, what happened? Now, what happened is that in March, the PPI number came in at 0.2% on a month over month reading, and a year over year reading was at 2.1%. Now, the expectation was for a 2.2% year over year and a 0.3% on a month over month number. And how this is broken down is that we have seen negative 0.1% on the goods side of the PPI number and an increase of 0.3% on the services side. Now, that 0.3% isn't specifically very good, but it paints a better picture than the CPI numbers did. And this is important because investors really want those rate cuts, because having those rate cuts is supposed to make for looser financial conditions in which companies should be able to strive for more profits. This is, of course, always what investors want. They want more profits. Okay, so having said that, it's time for my announcement. And what I want to tell you is that I've been really working hard behind the scenes on my own newsletter. And this newsletter will be for stock market research. And not just stock market research, but also stock specific research. Now, I can give you a little taste of what that might look like. And this is an example I want to give you. Now, this was the research I did for my Rivian analysis. And as you can see, I've put a lot of time and effort into creating a very compelling stock analysis of Rivian. Now, I will bring this in two tiers. The first one being a level in which you will get most of the numbers from me. The second tier is a paid subscription. And what you will get for that is a new stock analysis every week. You will get this in your email and you will get it in a nicely well designed PDF file. This way you can save it on your computer, and whenever you have a stock on your watch list that has been selling down and you have one of my research papers regarding it, you can just open that newsletter, check to see all the details about the company, about the competitors, about the numbers, about the PEs, how I view them. And in that way, you have an extremely solid starting point towards understanding every detail regarding the company. Why do I want to give this to you? That's because I know that doing research on a stock is taking extreme amounts of time. And besides having the time, you also need to know where to start. And that is why I want to come in with that newsletter to give you research and to analyze growth stocks for you. Now, when I launch it, I will give out a discount code, which means that besides having your first month free, because that is something I want to do for everyone just to see how much they like it, you will also get a 50% discount on the first 2 months of your subscription. Now, to get that discount code, please stay tuned for my future videos because it's coming in the not too distant future. But for now, thank you for watching. Please like and subscribe to this video, and I hope to see you next time. Bye.